Did you know that governments around the world use a hidden tax to make up for their budget shortfalls and policy mistakes? And that hidden tax is inflation. That sometimes some government put on everything and use this trick to pay off their debts. Yes, that's correct. जब भी कोई गवर्नमेंट अपने बजट की कमियां या पॉलिसीज की गलतियों के कारण ह्यूज डेट या लोन का सहारा लेती है, then that triggers a wave of money flow and mostly results in inflation. Let's see how it works. Government borrows money on a temporary basis to cover its budget deficit and later prints more money to repay this debt. This increases the amount of money in circulation, which reduces the value of each existing rupee or dollar or whatever the country's currency is. In a way, it's like the government is taking money from people without them realizing it and using this trick to pay off the debt. So it's similar to a tax, but it's hidden because people don't directly pay the government. Understanding this invisible tax is equally important, just like the direct taxes you pay, such as income tax and the indirect taxes like GST, etc. Hello people, I am Suraj Deo and welcome back to Deo Talks. For a common man like you and me, inflation works like this secret tax that gradually pushes up the prices of everything we want to buy and makes them more expensive over time. From basic stuff like food and clothes to other everyday items, inflation slowly adds to the cost of everything. And here's the interesting part. The government doesn't take this extra money from us openly as they do with taxes. Do you know why they are able to do this so easily? And no one questions them on this act? Because inflation is the only form of taxation that can be imposed without any laws. This means that, unlike other taxes, the government doesn't need to pass any new laws or rules to bring in inflation. It's like a hidden power they have to make our money worth less without asking anyone's permission. This has been going on in many countries like the US and UK, Germany and more. Let's dig deeper and understand how inflation really works and why governments sometimes use it to their advantage. You might be aware that most governments tend to spend more money than they earn. They collect money from us through taxes and by running businesses like railways, government companies, public sector entities, etc. However, there are times when they spend more money than they bring in. This situation is known as a budget deficit. Now the question arises, how do they make up for this shortage? Numerous countries including India, the US, the UK, Germany, France, China and others face budget deficits, and these governments use various strategies to manage their finances. I'll explain these in the context of India, USA and UK, but the concepts apply to most countries. Okay, coming back to the question, how do they make up for their budget deficit? Strategy number 1, borrowing. In India, the government issues bonds through entities like the Reserve Bank of India or RBI. These bonds are purchased by individuals, financial institutions and even foreign investors. The government raises funds for their use by selling these bonds and promises to repay the principal amount along with interest at a later date. In fact, governments worldwide use similar techniques, yet this approach has limitations, pushing them to explore other tools, which we will discuss shortly. One small request before we move further. If you have found this information useful so far, please like this video and subscribe to our community. Your support means a lot. Strategy number 2, increasing taxes. In India, the government depends on taxes such as personal income tax, GST, corporate tax, etc. in order to generate revenue. Likewise, the US and UK governments use various taxes including income tax, payroll tax, VAT and corporate tax. One way the government can raise more funds is by asking people to pay higher taxes. They might increase the existing tax, introduce new ones, or broaden the tax base to include more individuals under taxation, thereby boosting the government's income from taxes. But the thing is, most of us don't like paying more taxes because it means we will have less money to spend on the things we really want. Hence, governments continuously search for new tools to manage their budgets. Strategy number 3, reducing expenditure on subsidies and programs. The Indian government provides subsidies on essentials like food, fuel and fertilizers to support vulnerable populations. While these subsidies serve social and economic purposes, they can strain the budget also. Similarly, countries such as the US, the UK, India and many others allocate funds for various programs including defense, healthcare and social security. For instance, entertainment programs like Social Security and Medicare in the USA contribute significantly to government spending. So another option for the government is to spend less money. However, since a huge portion of the government's budget is directed towards assisting common people with matters like healthcare or support programs, And we all know these common people are the real vote banks. So cutting back on these areas isn't always well received by people and could potentially lead to public dissatisfaction with the government. So what's the next option for these governments? Here comes strategy number 4, revenue from government-owned enterprises. In countries like India, the US, the UK, etc., state-owned companies operating in sectors like oil, telecommunications and railways play a vital role in contributing revenue to the government. For instance, the Indian Railways serves as a substantial income source for the Government of India through its ticket sales and freight services. While revenue from these sources helps the government in budget management, but it often proves insufficient, leading to the next and final strategy, that is strategy number 5, the secret trick called inflation. When the above options don't seem easy, governments across the world might pick the most common choice, that is inflation. Here's how it works. Initially, they borrow money on a temporary basis to cover their budget deficit and later print more money to repay this debt. This increases the amount of money in circulation, which reduces the value of each rupee or dollar or whatever the country's currency is. In a way, it's like the government is taking money from people without them realizing it and using this trick to pay off the debt. So it's similar to a tax, but it's hidden because people don't directly pay the government. Now the question comes, what happens when more money is printed? Okay, the new money gets its value from the existing money in circulation. So when more money is printed, the value of all other money decreases. Common people like you and me don't understand this process. And that's why many of us remain unaware that these things are taking place. Governments from many countries spend freely and then use inflation as a tool to tackle their debt problems. Therefore, inflation might be sneaky, but it's important to know about it because it impacts how much stuff we can buy with our money. So next time you see prices going up, you will know that inflation is working behind the scenes, and you will also know how it works and makes your money a little less powerful. And if things don't change, we are going to leave a big mess for the next generation. And by that I mean mostly the countries like the US, the UK, China, etc. However, for India, I believe regulatory bodies like RBI have performed exceptionally well, even in adverse economic conditions. That's all for now. Please feel free to leave any question or comments below. Thanks a lot for your time, and let's take care of this beautiful world. I'll see you next. And smile. Always smile.